Hi guys, welcome to the briefing room where we provide you with the latest market updates to keep you ahead of the curve. I'm Billy Toh, the Regional Head of Retail Research at CGS International, and today I'll be talking with our market strategist, Chua Wei on whether the AI trade is over. We'll be focusing on market rotation, Nvidia signals, and where opportunities are emerging.
The last week of January as well as the start of February, we saw quite a bit of sell-off in the tech sector as well as some of the AI related names, right? So
Yep.
Wei, maybe from a technical perspective, do you want to share with us on how you see the market?
Yeah, sure. It will be an honor and privilege to share this, my technical outlook on the market and what to look out for, especially on like the uncertainty that we should share on, BD shared on the event on Saturday that we are growing more uncertainty in the market across the global region. All right, but from a technical perspective, I think I want to go through the market breadth outlook. So what has the market breadth been performing across the US, Europe, and the Asia Pacific. But I think I will just go straight into the US as this is much of the focus one that we have. So from last week until now, actually for the past 2 weeks, the market breadth actually significantly increased. And then we can see that for the first time in 6 years, we can see that the Dow Jones Industrial Average, the market breadth actually improved significantly. Meaning to say that if you look at the chart which I'm going to share over here, you can see that the weekly advance actually increased from last week from 12 to 20, and then the decliners actually dropped to 10. And whereas the S&P 500 index from the negative 63, it has improved back to the positive eight counters that they are looking at a strong upside for the S&P 500. So we think that market breadth has improved across North America last week. And then the Nasdaq 100 also has back into the positive zone, particularly because of the chips and tech saw a strong rebound. All right, and yeah, I think one thing that's bothering people is Nvidia a good buy now? All right, so because we see that Nvidia from October last year until the drop to the key support at around around 169, we estimate to 170, there's a 14% drop. And yet on Friday itself, when market open, it jumped 7%. All right, it means that it closed is quite strong. But from the technical perspective, I think Nvidia is neither bullish, neither bearish at the moment. So it's kind of like if you look at the chart, it's in the neutral stance. So why do I say so? Because there is first is very topish. It looks like it's forming an inverted. Sorry, not inverted. So it's a classic head and shoulder pattern. With $196 $194 as a resistance line. So now 169, the support is actually the neckline support of the head and shoulder. So breaking below, it means that the head and shoulder has confirmed its bearish reversal, and then we are likely hit down. So to me, as a point from a trader point of view, Nvidia is at most we are going on to a short-term speculation mode right now, all the way until the earnings. All right, but I think that I won't touch Nvidia, but I think that according to trading stock, what is the best momentum? I will have 5 stocks. All right, so Intel is one of them. I returned it in 1st December 2025. As you can see from the report itself. Applied Material has been doing great. I think upside momentum is strong. Returned it in 20 November, and then I have returned it as of today. Today is the 9th of February. I think that momentum is likely to continue to be strong. And what's the best thing is, as I caught Applied Material back in 20 November, I saw that it's bottoming out, strong momentum. We are up 37% as of the current price. And then there are some some names like you will have heard of Global Foundries, GFS, Texas Instrument, and also the memory names that's getting the hype now. You can see ScanDisk jumping, but I made a call on Western Digital. And you can see Micron, who do DDRM, has already jumped up very much. So all these have really up. I think my Western Digital up 120% as of the current price. But it hit my final TP at 180 way earlier than I expected. Should have upgraded my target price. Should have make the bold courage to update the target price. But nonetheless, we reinitiate the technical buy, and then below are the details, the reports. You can read it. And then if you are a client. All right, so BD, what do you think? Do you think Nvidia is still a strong upside given the supply chain, given the outlook that you have? We After hearing from technical, I just want to pick your brain on how's Nvidia doing. BD? Yeah, I mean.
I think structurally, the tech companies, in terms of especially those in the AI space, in terms of growth, I think we are expected to see that to happen. I guess one of the key areas that led to the sharp sell down in the towards the end of last year as well as the start of the year was really because of the partly AI fatigue. I think, of course, the concentrated trade in the AI space and when it unwind. So when people start to unwind that concentrated trade and look into other opportunities in areas like industrials, even like the smaller names, for example, the memory players that are involved in the AI supply chain. So you see that unwinding and it triggers to a certain effect, right? So for example, if you look at, it's not just the tech, even like you look at gold and silver, right? When it for most of the asset classes, the decline it happened at the same time. I think people are just looking at some of the other opportunities in the market after some of the hot rally that we have seen in the long term, right? I think we've talked about a few things. You mentioned Intel earlier as well. I think those are things that we've talked about for a long time. I think in terms of growth, we do look at Intel as one of those beneficiary of the AI supply chain as well as their venture into the fab business. So naturally, the dominant player at the fab business is TSMC. So with Taiwan, one of the key risks with the rising US and China sort of competition to be the dominant economy in the world. So this actually gave Intel an advantage to see more American tech companies diversify their supply chain away from just relying on TSMC. I think it's good that you also mentioned things like Western Digital and all that. It just shows that there's a lot of opportunities along the way, right? It's not just the Nvidia, it's not just the Amazon or, of course, Alphabet has seen a pickup as well after their breakthrough in the AI space. So I guess basically what we are seeing is really rotation away from the concentrated names. And it's just, and I agree with what you said, I think it's really, there are a lot more opportunities elsewhere, especially and to wait until the earnings in April or March, where you can actually look at it to see how the performance, whether it meets the expectations of some of the analysts in the market, right? So as a more moderate in terms of valuation, I think that will help in terms of the market sentiment going forward. I do think that you have some other names, right, in the consumer space that people can actually look at other sectors aside from just the tech names.
Yes. Thanks for highlighting that, Billy. All along I wanted to showcase the consumer and the industrial stock. But today let's just focus on consumer. But before that, I would like to touch on this thing that rarely any technical analyst will touch on is the Dow theory. So what is the Dow theory about? Is basically Dow theory this formalization of Dow theory is actually by this gentleman called Charles Dow. So he came out with this theory. He came out with this theory, but someone, I think maybe his mentee or disciple, actually formalized all his thought and then consolidate into a writing itself. So it actually is as old as where the Dow Jones Industrial Average is being formalized. All right, so the Dow theory actually is a very simple tool. You basically place the Dow Jones Industrial Average and the Dow Jones Transportation Index and then see if they are picking up. So this year, we finally see that the Transportation Index actually broke the new high, all right? Very much, it broke the high and then Dow Jones Industrial Average break the high. And yes, on a side note, the Dow actually has broke 50K as of last Friday. All right, Billy. And this is the target that I always looking out for. Actually, I steal from Donald Trump because Donald Trump is the one who said that Dow Jones is likely to go up to 50K. If you have read the news going on forward. All right, so we think we have two calls on the transportation stocks. If you are doing e-commerce, you will know one is UPS, one is FedEx. All right, FedEx, you see their planes. UPS, you see their planes as well. They're doing delivery worldwide. All right. And then lesser name like CSS Corp, all this. But I want to bring you to a point that so transportation is not the focus because it's rent so much, but consumer has really bottomed out, especially on the fact that retail is like your Nike is looking at accumulating, consolidating, looking for potential breakout. And then your Deckers Outdoor, which I did a report on 9th of February today, together with one of the few semi names and tech names. All right, so for the consumer names, they are seeing strong upside. You can see like the traditional Warren Buffett kind of stocks is like McDonald's, your Coke, all-time high. So Coke, I recently passed, I think in October, and then we are looking at I made a call on Pepsi because it has really broken out of the range since February the 2nd, and then we are looking for a further upside as well. All right, and then there's one stock that I really like. It's called Colgate Palmolive. All right, so hope I pronounce the name correctly. But Colgate, you know that you need it. You need this to keep your teeth white, clear. Yes, Billy. Yes, I like this. Do you use Colgate or do you use? Okay, let's not go into that. But you can see from the chart, seeing the video. All right, it has really broken out of the downtrend channel. Um, a clear break of structure, a clear uptrend. You can see that there's higher lows in that. So we are looking for further upside for Colgate. And then the next one that I wish to highlight is the fact that I think the packaging. I think transport, consumer, and then next one is a packaging company like Ball Corp. Ticker code is BALL. It's not likely, it's like, okay, you can think of like Crown Castle or something that they do packaging, movers, all this. All right, they are part of the transport and consumer because you need to move your goods around. So Ball actually provides a lot of metal packaging for beverages, food, and household products. So broke out of the double bottom formation, and then it has going up since. So we are looking for further upside on that Ball. All right, and then AMCOR, I think the ticker code is AMCR. I think this is more, it's also like cartons, more for your movers, but also it has really broken up, filled out the gap, and then looking for further upside already. So that's all the thing, consumer, transportation, and this we are looking for a strong continuation to upside rally, perhaps even bottoming out, and then we can see mid to long term we are looking for a uptrend as well. All right, so I think industrial I'll leave it for another time because this podcast will be going on for quite some time to give you market feedback, and then we will be doing we try to do global. Maybe Billy, maybe we can do global next time.
Yeah, I think so. Because I mean, if you look at the market, we've seen quite a bit of rotation away from just the big names. Even like it's not just in US, for example, even in Hong Kong, I think we've seen quite a consolidation in the tech names as well. So there's a rotation away from some of those names that have been winners, right? I mean, even for example, I think the recent announcement from, was it DBS in Singapore, the earnings that disappoint.
Yes,
I guess.
this morning actually.
Yeah, I mean, of course, we won't deep dive into the disappointment or why the reasons of that. I think our analyst will cover that in his report. But I do think that what it shows is that I think the expectations for a lot of the past winners have been skyrocketed for quite a fair bit. I mean, with some of the valuation, I think some of them have gone up for quite a fair bit. And of course, there are opportunities elsewhere that we are looking into. I mean, even for example, you look at this year, start of the year, the IPM KLC has done very well. The Thai market has also done very well, playing a catch up, and especially with some of the resolution in their political, and I think they just had their election. So some of those uncertainty have more or less resolved. So we do see a bit of rotation away from the usual names that we are used to. So I think your technical, in terms of how the momentum trade, would help our clients to look at where some of the opportunities are. I guess that's it for this round. Do stay with us for our next session, and if you like our recording and our podcast here, do follow us on our YouTube and our social media channel. All right, thank you, everyone.